I want you to pause, stop refreshing the screen, stop looking at the P&L column, stop calculating how much money you made in the last 48 hours. I know the feeling you are having right now because I have felt it. It is the most dangerous drug in the world. It is the feeling of being right when the rest of the world is wrong. You are looking at your brokerage account and you see green. Maybe you are a short seller who bet against silver at $120. And now you are looking at $72 and feeling like a god. You think you have secured your retirement. Or maybe you are the contrarian, the smart money dip buyer who stepped in yesterday morning at $70. And you are currently up 15% as the dead cat bounce kicks in. You are sitting there, sipping your coffee, telling yourself that you mastered the chaos. You think you beat the algorithm. You think you outsmarted the crash. I am here to deliver the most painful news you will ever hear. You didn't win. You haven't won a single dime. What you are looking at on your screen is not money. It is a scoreboard in a video game that has already been turned off. You just don't know it yet. You are not the player. You are the content. You are the liquidity. And the reason I know this is because right now, at this exact second, thousands of traders across London, New York, and Hong Kong are trying to do the one thing that actually matters in trading. They are trying to withdraw, and they are failing. Welcome to the morning of Tuesday, February 3rd, 2026, the day the exit door is locked. While you were celebrating your paper profits, the infrastructure of the market quietly shifted beneath your feet. I want you to try something. I want you to open your brokerage app right now. Go to the withdrawal tab. Try to move your profits to your bank account. If you are on any of the major electronic platforms, you are likely going to see a message that looks innocuous. It probably says, withdrawal pending liquidity review, or maybe standard compliance check, 48 to 72 hours. You read that and you think, oh, it's just a delay, it's busy. No, it is not a delay. It is a gate that has been slammed shut to keep your capital inside the burning building while the owners sneak out the back. We need to deconstruct the arrogance of the retail trader today, because that arrogance is exactly what the system is feeding on. Let's start with the dip buyers, the people who think they are playing 4D chess. You saw silver crash 38% on Friday. You saw it hit $72. You remembered the quote, be greedy when others are fearful. So you bought the SLV ETF. You bought the leveraged futures contracts. You bought the paper because it was cheap. You think you own silver at a discount. Here is what you actually own. You own a counterparty risk that just changed its terms of service while you were sleeping. Did anyone read the prospectus update for the major silver ETFs that was filed quietly at 3 a.m. this morning? Of course not. Who reads legal documents during a market crash? But if you had, you would have seen the clause that should make your blood run cold. It is a modification to the force majeure section regarding redemption. It states that in the event of extreme market volatility or supply chain disruption, the fund reserves the right to settle redemptions in cash equivalent based on a fair value determined by the trustee rather than the underlying metal. Translate that into English. It means that if silver rockets back up to $150 next week because of the physical shortage, they do not have to give you the profits. They can declare that the fair value is actually $75 based on some obscure metric, force you to take the cash and keep the difference. You bought the dip, but you gave them the option to cancel your winning lottery ticket. You are taking 100% of the risk for capped upside. You think you are the smart money accumulating cheap assets? No. You are the bag holder of a paper promise that they have already decided to default on. They needed you to buy, so they had someone to sell their toxic shorts to. You didn't catch a falling knife. You caught a grenade that they pulled the pin on. But the trap is even worse for the short sellers. And if you are short right now, if you are betting against silver, you need to listen to me very carefully because you are in immediate danger of total annihilation. You look at the chart, you see $72, and you think the trend is your friend. You think silver's going to zero. You are sitting on massive paper profits. But have you tried to close your position? Have you tried to buy to cover? This morning, the CME invoked Rule 589. This is a price limit rule. It is designed to prevent markets from moving too fast. But in reality, it is a cage. When a market is limit down or limit up, trading stops. it freezes. If you were short and you want to take your profit, you need to buy a contract. To buy a contract, someone needs to sell it to you. But guess what? Nobody is selling. The physical holders have gone on strike. The miners are hoarding. The only people selling were the forced liquidations, and those are done. So here is the nightmare scenario that is unfolding right now. You are short, you are rich on paper, but the market is frozen. You cannot close the trade. Meanwhile, in the real world, in Shanghai, in Dubai, in the private dealer networks, the physical price of silver is ripping higher. It is disconnected from the paper price. When the CME finally unlocks the market, it is not going to open at $72. It is going to gap up. It might open at $90. It might open at $100. It happens in a millisecond. Your massive profit instantly turns into a massive loss. And because you are short, your losses are theoretically infinite. You are trapped in a room with a starving tiger, and the door is locked from the outside. The Rule 589 halt is not there to protect the market. It is there to protect the big banks who are positioning themselves for the squeeze. They are holding you in place until they are ready to slaughter you. And how do we know the game is rigged? How do we know that this isn't just normal market chaos? We look at the data. Specifically, we look at the spread. I want you to pull up the level 2 data for silver futures right now. Look at the bid and the ask in a normal, healthy, liquid market. The difference between the price you can buy at and the price you can sell at is maybe 1 cent, 10 cents at most. That is liquidity. That represents a functioning market. Right now, the bid ask spread on the front month silver contract is $5. $5. I cannot overstate how catastrophic that number is. A $5 spread means the market makers have left the building. It means the banks that are legally required to provide liquidity have turned off their algorithms. They have pulled the plug. They are saying, we will not touch this market. When the spread is that wide, it means price discovery has failed. It means that the price you see on the screen, $72, is a hallucination. It is the last traded price, but it is not the price you can get. If you try to sell, they will fill you at $69. If you try to buy, they will fill you at $74. They are skimming 10% of your equity on every single transaction. This is not a market anymore. It is a shearing machine. And you are the sheep. So why is this happening? Why create this illusion of a market that lets you enter but not exit? Why let you see green numbers that you can't spend? Because they need you, the puppet masters, the bullion banks, the clearing houses, the central planners. They are currently facing a liquidity crisis of their own. They are short millions of ounces of physical metal that they do not have. They know the vaults are empty. They know the Salt Typhoon hack has exposed the ledger. They are desperate. And when a giant is desperate, it eats the villagers. They need your capital to remain in the system, to act as collateral for their own bad debts. When you deposit $100,000 into your brokerage account to buy the dip, that money doesn't sit in a vault for you. It gets rehypothecated. It gets lent out. It gets used to shore up the balance sheet of the clearing firm by keeping your withdrawal pending. They are using your money to pay their margin calls. You think you are the investor? No. You are the unsecured creditor of a failing institution. You are bailing them out with your optimism. And the cruelest irony is that the smart money retail trader is the easiest victim. The person who reads the charts, who follows the RSI, who studies the Fibonacci retracements, you are the easiest to manipulate because you follow rules. And they write the rules. They knew you would buy at the 61.8% retracement. They knew you would be short at the breakdown of support. They painted the chart to make you do exactly what they wanted. They engineered the technical breakdown to trigger your sell stops. And then they engineered the fake recovery to trigger your buy orders. They churned you. They collected the fees. And now, when the dust is settling, they are holding the physical metal, and you are holding a pending transaction slip. This brings us to the fundamental disconnect that is defining this crash, the war between the digital delusion and the physical reality. For the last 20 years, we have been trained to believe that wealth is digital. We have been trained to believe that if it's on a screen, it's real. We have been conditioned to trust the pixel over the atom. This week is the violent deprogramming of that cult. The people who are winning today, the truly winning people, are not checking their brokerage accounts. They are the ones who bought physical gold and silver 5 years ago, 10 years ago, last week. They are not worried about Rule 589. They are not worried about cash settlement clauses. They are not worried about withdrawal reviews. They hold the asset. There is no counterparty. There is no spread. There is no pending state. But you, the sophisticated trader, you are glued to a monitor, obsessing over a number that you do not control, governed by a system that hates you, betting on a game that is rigged. You are stressed. You are not sleeping. You are snapping at your family. You are refreshing the page every 10 seconds, hoping that the pending changes to approved. You are a prisoner of the screen. And this is where the tragedy lies. It is not just about the money. Money comes and goes. You can lose money and make it back. The tragedy is the arrogance. The tragedy is that we really thought we could sit at our little desks in our pajamas and extract wealth from the most ruthless, politically connected, mathematically advanced financial cartel in human history just by clicking a mouse. We thought we were players. We were never players. We were the feed. The $5 spread is the bars of your cell. The cash settlement clause is the lock. And the withdrawal pending message is the guard telling you that you aren't going anywhere. So what happens next? What is the end game of this trap? In the next 24 to 48 hours, I expect we will see a resolution, but it won't be the resolution you want. The exchange will likely announce a settlement price. They will say that due to irregular market conditions, all open positions are being settled at an arbitrary price, maybe $80, maybe $85. They will force close your trades. If you were short, they would wipe out your profit. If you were long, they will cap your upside. They will reset the board. They will give you your digital credits back, minus a hefty fee, minus the spread, minus the losses, and they will say, system restored. But the physical metal, that will be gone. That will have moved permanently into strong hands. The price on the street will be $120, $150, maybe more, but you won't be able to buy it. You will have your digital dollars returned to you by the Graces Exchange, but those dollars will be chasing a ghost. You will have profit in a currency that can no longer buy the thing you wanted to own. This is the ultimate rug pull, not taking your money, but taking your purchasing power, leaving you with a husk of the currency while they keep the seed of the wealth. I want to end this with a thought that has nothing to do with charts or margin calls. I want to speak to the human being behind the trader. I know how much this hurts. I don't mean the financial loss. I mean the ego death. I mean the realization that you were played. You spent hours studying. You spent nights researching. You sacrificed time with your children, time with your spouse, time with your own health, all to stare at these flickering lights and try to secure a future. You gave your life energy to this machine, and the machine chewed you up. There's a profound sadness in the life of a trader who realizes the game is rigged. It's a feeling of hollowness. You look around your room and you realize that while you were mentally living in the futures market, the real world was passing you by. The sun came up and went down, and you missed it. Your kids grew a little bit older, and you missed it. You were present in body, but your mind was trapped in the bid-ask spread. And for what? To be trapped in a liquidity review, to be treated like a nuisance by a customer service bot. Maybe this crash is a blessing. Maybe the withdrawal pending is a sign. It is a sign to withdraw not just your money, but your soul from this casino. It is a sign to realize that true wealth is not found in the ability to leverage a futures contract 100 to 1. True wealth is found in the things that cannot be hacked, cannot be holded, and cannot be settled in cash. True wealth is a physical ounce of silver in your pocket. True wealth is a plot of land that you can stand on. True wealth is a skill you can perform with your hands. And true wealth is the time you spend with people who love you, regardless of what the spot price of gold is doing. The market has humbled us today. It has shown us that we are not the masters of the universe. We are small fish swimming in a tank owned by giants. And the giants just decided to drain the water. So close the laptop, put down the phone, walk outside, look at the sky. It is still there. The world is not ended. The financial system is breaking. Yes, the illusion is shattering. Yes, but you are still here. Don't let them take your peace. They have taken your liquidity. They have taken your margins. They have taken your confidence. Do not let them take your humanity. If you are stuck in the trap today, forgive yourself. You didn't know the deck was stacked. You played by the rules in a game where the rules are weapons. Learn the lesson. The lesson is, if you don't hold it, you don't own it. If it has a counterparty, it has a risk. If it is on a screen, it is a mirage. Take the loss, whether it is financial or emotional, lick your wounds. And then make a vow to never again let a digital algorithm dictate your self-worth. Build your life on solid ground. Build it on things that are real. The game is over. The casino is closing. Go home. This is the hidden economy. And the only thing we truly own is our time. Don't let them short that.